So friends, considering that the Infosys will be achieving the target of 1500 levels, or say 1540 to 1553 levels. Here we can see that there is a major resistance at 1500 levels. I have chosen two lots in this strategy. You can decide if you want to go with the one lot also. You can do it with the one lot. So first moves by 1%, and if it expires somewhere at 1475 premium, to make the adjustments and reduce the loss of around 7,305 rupees in the Infosys. So at present, if we see friends, welcome to my YouTube channel Niftypreneur. In this video, I'll be sharing my analysis, technical analysis, and also the Readymade option strategy for the Infosys stock options. This is for the month of October 2022. So I will request you to watch this video completely because I'll be explaining all the important details in this video. So I don't want you to skip and avoid any important information, so that you'll be benefited from all my analysis and the option strategies that I'll be sharing in this video. So I'll request you to watch this video completely and also leave your comments or questions in the comment box, and also like and subscribe to my YouTube channel. So now let us start this video on the Infosys option trading strategy for the month of October 2022. So here right now we are on the daily time frame in the Infosys technical chart. So as you can see that I have drawn two important lines. So first thing is downside. I'm considering that the 1387 levels to almost 1361 levels will be acting as the support for the Infosys stock, and the target will be 1543 on the for the monthly time frame. So for this month contract, I'm expecting the Infosys to achieve a target of 1540, and if it is not able to achieve 1540, it may be trading sideways. And also if it crosses 1387 levels or say that 1358 levels, then we can see that Infosys will be in the bearish trend in the continuation even in the October month. So friends, considering that the Infosys will be achieving the target of 1500 levels, or say 1540 to 1553 levels, but I'll be creating a strategy, a best strategy which will help even the retail trader, and it does not require any kind of adjustments even if the Infosys is trading between 500 levels or say 1530 levels. So the first strategy that I'll be sharing is a modified iron fly strategy for the Infosys. I request you to watch this part carefully so that you don't miss out on the important information. I'll just try to zoom in so that if you're watching this video in the mobile, you'll be having a clear information. So friends, I have zoomed into this payoff graph and the chart. So now I will explain you. As I told you that see here we can see that Infosys Infosys is expected to achieve a target of around 1500 plus 1538 to almost 1550 levels. And also if we observe the open interest data on the monthly time frame in the Infosys, here we can see that there is a major resistance at 1500 levels, and at the strike price of 1500 we can see that there is a total call options open interest at 37,600, and the put options we can see that it is at 4,82,100, and PCR ratio here we can see it 0.15. So call open interest change is at 3,60,300, and the put option open interest change is at 14,700. So now here we can see that to implement this strategy, I have chosen two lots in this strategy. You can decide if you want to go with the one lot also. You can do it with the one lot. So first thing is we need to buy 1460 put and 1540 call, each of one lot or two lots. Once you have successfully bought both of 1460 put and 1540 call, then you need to sell 1500 put and 1500 call. So right now you can see that this is the after market hours, and right now we can see the premium is at 74 levels, 74 for the 1500 put and 27.85 for the 1500 call. And also for the hedging positions on the put side, we can see that right now it is at 48.45 levels, and on the call side it is 16.35 levels. So considering that if you are able to implement this strategy with the same premium prices, then I'll be showing you what will be the probability of profit, risk to the max profit, max loss, or risk to reward ratio. So here we can see that it is showing at 22.45% the probability of profit, and the max profit you can expect from this strategy, which is at the two lots, will be 22,230 rupees. This is almost 23.30% on your capital, which will be deploying in this strategy. So in the max loss will be 1,770, even if we are trading with the two lots in the Infosys options, stock options. And here you need to observe the max risk to reward ratio is 1:12.56. The break-evens for this strategy will be 14.63 on the lower side and 15.37 on the upper side. So you'll be making profit of around 22,230 if the Infosys will expire between 1463 levels or 1537 levels. Also, I will suggest that you can exit the strategy 1 week before the last week of the expiry, just to avoid the physical settlement of the stock. And the net credit you'll be receiving if you are doing the two lots trade, then you'll be receiving a net credit of 22,230 rupees, and the estimated margin or the premium required will be 95,388 rupees for the two lots. So now I will reduce this to the one lot so that you'll get an idea what will be the profit, suppose if you trade even with the single lot. So friends, as you can see that I have reduced the lot size from two lots to one lot. Now you can see the max profit is 11,115 and the max loss will be 885. So here once again the risk to reward ratio has not changed. It remains the same at 1:12.56. So this is an amazing option strategy for the option sellers, because from this strategy either you will end up making profit of 11,115 on the single lot basis, or max you may lose rupees 885 in this strategy. So if you're doing the single lot strategy, so you would be required to have a capital of around 47,695 to implement this strategy. But I will suggest that you need to have at least 1 lakh to implement this strategy, because if if they need to be additional buffer margin, which is always better to trade in the options, whether it is the stock options or the index options. So now this is my second option strategy for those who can do the adjustments, those who understand how to do the adjustments in the Infosys stock options. You can definitely try this strategy. So this is in this strategy. To implement this strategy, first you need to buy 1440 put strike price put one lot, then you need to sell 1520 put one lot. So in this strategy you will be having a max profit of around 16,695 rupees, which is to almost 41.99% on your capital. So here you will be having a max loss of 7,305 rupees, which is to almost minus 18.37%. So here max risk to reward ratio is 1:2.29 levels. So the break even will be 14.65 levels on the lower side. This means that if the Infosys is expiring below 1465 levels, then you will end up making loss of 7,305 rupees. So once you implement this strategy, you will be receiving a net credit of 16,695 rupees, and the estimated margin premium required will be 39,757 levels. So now let us, I'll show you what will be the profit if the spot price moves by 1%, and if it expires somewhere at 1479 levels, then you will end up, say suppose if the Infosys is going to expire at 1508 levels, the spot of the, suppose if the Infosys stock expires at the price of 1508.95, then you will be making a profit of around 3,905 rupees. This is on the expiry. But even if you are exiting the 1 week before the expiry, you will end up making profit of around 3,000 rupees. And as we discussed that if the Infosys is trading above 1531 levels, at least before the last week, then you can see the profit of around 5,718 rupees on the single lot basis. And to do the adjustments here, first thing is we need to see, suppose in case if the Infosys is, say suppose if the Infosys is trading at 1435 levels on the near to the expiry, then there is a possibility that you will be making a loss of around 7,305 rupees. And to do the adjustments, let us do a quick calculation. Suppose if the lot size is 300 for the Infosys. So friends, to reduce the loss of 7,305, we need to divide this into the lot size of Infosys, that is, which is 300. So here you can see that we'll be requiring a premium of around 24.35 premium to make the adjustments and reduce the loss of around 7,305 rupees in the Infosys. So at present, if we see that we need to have a premium of 24. So friends, I have shown you how to do the adjustments. Suppose if the Infosys is trading below 1444 levels, if this is the 1444 levels, there you need to make adjustments, and to do the adjustments you will be required to sell option which is at not less than 24.35 levels. As I showed you here, this is a premium that we need to sell to make the adjustments, 24.35 levels. So here we have the premium. Right now we saw that there was a premium of 21.05. So as you can see here, after doing the adjustments, right now the max loss is around 990 rupees. This is on the expiry day. Even on the expiry day, if the Infosys is going to expire anywhere between 1395 or say even at 1244 levels, then you will not lose more than 990 rupees. So friends, you still have any doubts in the adjustments part, then you can leave a question or you can leave your comment in the question so that I can clarify doubts. And if there is a possibility that if Infosys is going to go down and it bounces back to the 1445 levels, above 1445 levels or 1456, here you can see that you'll be making a very decent profit here. So that you need to exit this strategy before the Infosys crosses above the 1593 levels. So I will once again suggest that you need to exit in this strategy once the Infosys is trading anywhere between 1459 levels or 1577 levels, because you can see that you will be ending up with a very good profit from this strategy. And also after doing the adjustments, here you can see that the estimated margin required will be 74,589 levels. But still I will suggest that you need to have a sufficient capital in your demat account so that you will not be having any penalty in the additional margin required. So friends, this was my two strategy. The first one is the modified arrange price strategy, wherein you'll be required a capital of 47,694 rupees and you'll be ending up making a profit of 11,115 rupees. or a max loss of rupees 885 rupees. So even if you don't do any adjustments, but still you'll end up making the max loss of 885 rupees, or you'll end up making a profit of 11,115 rupees if the Infosys is trading at somewhere at 1500 rupees. So thank you for watching this video. Please hit a like button, share this video with your trading friends, and leave the comments questions so that I can clarify your doubts.